Alright guys, well it's official. You now have Wall Street saying Palantir is on its way to $1 trillion. So obviously the hype train has left the station, but let's look and see what is true and what isn't true according to Wall Street. Alright guys, you know exactly how this goes, and I'll say this for this video. There was some great points in it. There was also some not so great points in it as well that kind of show you the difference between Wall Street investors and long-term buy and hold investors there. But don't worry, we'll cut through all of it. We'll get down to the truth, separate the fiction from everything else right after you hit that like button if you like getting the truth out the hype, because that is exactly what you're going to get today, guys. So as you guys know, with Palantir, we were all over it under $10, even as YouTubers who were bullish on it freaked out at $6, $7 or so. I don't know, Alex banged the table, therefore it was worst thing ever, worst earnings call ever. Of course, Wall Street being negative, it turns profit, then gets cut by 50% after turning a profit. All those sort of things like that were just golden opportunities to scoop up shares. And if you're serious about your investing, make sure you take advantage of the earnings sale that is going on right now. Get your membership. It's the pinned comment down there. We'll talk more about it at the end, but make sure you take advantage of that before the sale ends. All right, let's get down to the truth, and I'll give you my opinion on if Palantir is going to be that $1 trillion company or not.
Welcome back to Market on Close. I'm Marley Caden. To discuss the latest tech earnings, joining us in studio today is Nigam Arora, the founder of the Aurora Report. Nigam, so great to have you in person with us today to talk tech. First, what are some of the companies you think performed the best this earnings season?
Well, I think the company that performed the best is Palantir, Microsoft, Meta. So those are the three on the top of the list. The companies that didn't perform well are Amazon.
Oh, poor cloud. Poor AWS.
Yeah, poor AWS, still larger than their nearest competitor by, 35%. But we won't, discuss things of that nature. This is typical Wall Street stuff, already starting off as a typical Wall Streeter. They're just going right along with the narrative instead of actually looking into the earnings themselves. But it's early. He did get the three stocks right. I love Palantir's earnings. You guys know that. Love Meta's earnings. Obviously, Microsoft have great earnings as well. I don't track that company nearly as close because I don't own it. But nonetheless, can't argue with those three there. But the last one, kind of tells me, all right, not off to a good start here.
They're trying. Let's focus on the positive, though.
Okay.
What was it about Microsoft? And let's talk Microsoft and Meta first, and then we'll talk specifically about Palantir. But what about their reports did you think were so strong?
So Microsoft has this cloud we call Azure, and very high expectations. And as you know, there are consensus numbers and they're whispered numbers, right? Everybody thinks only they know, nobody else knows, right? And those whisper numbers were pretty high going in, and Microsoft beat those. So what's happening is Azure is taking share from AWS. So that was good. And then, of course, Microsoft Copilot, which some of us are using, and they got more users than anybody thought. And then Microsoft is so embedded in the enterprise, right? It's not just consumer, the enterprise is so embedded. And there's more and more use of AI. So if you're looking for an AI software play, Microsoft is the best there is, because you're not also...
Wow, Microsoft is the best AI play that there is. I don't really know where he's going with that right now. I think we're early in that race. And although I don't believe Microsoft is behind, I don't believe anybody's behind really. But nonetheless, to say it's by far and away the best place to put your money is an AI play, that's definitely not where I would be putting my money. Of course, I don't invest strictly based on AI, but if you were going to, I don't know if Microsoft would be top of the list for most. It kind of seems like this guy, that's kind of his favorite, which is fine. I'm not saying it's bad company or anything else of that nature. Please don't take it that way. But boy, I don't know. I'm going to keep my comments to myself otherwise.
To the consumer whims because they're so heavy in enterprise.
And so let's talk about Palantir now. I love when you make these predictions, these price predictions or market cap predictions, because you have a history of them coming to fruition. Now, you say Palantir has a very clear path to becoming a $1 trillion company. I'm taking a look at its market cap right now. It's about $434 billion right now. What is it going to take for Palantir to get that $1 trillion market cap?
So, they're making the board. I've been in the markets for a long time. I've never heard or seen anybody make a bold prediction like they have. They say they're going to increase the revenue by 10 times. So right now they're around 3.4 billion.
So apparently he hasn't been in the market for the past, 10, 15 years. I have no idea where. I've heard way more ridiculous. Heck, just go to any Tesla earnings and you'll hear way more ridiculous predictions than 10xing revenue like Alex Karp made. So I don't know where this guy's been. The CEOs make bold claims from time to time. I agree it would be rare. But to say you've never heard anything like that, kind of seems like you're trying to create a narrative, not necessarily paying attention to earnings, or you really don't listen to all the earnings calls and that just happened to be a headline you happen to run across and, oh, well, that's an interesting headline. I guess I really hadn't heard that before. I don't know, guys. This is the reason why you have to be so careful with who you listen to and what you listen to, more importantly, because the guy obviously has been investing for a long time. But for him to make a statement like that tells me you hadn't listened to very many earnings calls all the way through, because you hear some pretty ridiculous stuff from time to time on earnings calls.
34 billion. There are 4,100 employees, and they say at 10-time revenue, they'll have only 3,600 employees. Now, as you know, in AI, I mean, you're not buying widgets, you're not buying material, your only cost is people. So they're already at like 81% gross margin. So their margins are going to be huge, like 95%, which is unheard of, right? And they're getting so deeply embedded in the government, essentially in the Department of Defense, right? And, you know,
Again, where's this guy's been? They've been embedded with the government for, 20 years now? I don't know. Maybe he just got interested recently. Who knows? Don't know. But, geez. Woo.
I used to be in the defense business. I set up a company and we did a lot of defense business. That business is sticky. You have longer term contracts, so it doesn't go away, So I don't know about 10 times, but doubling, tripling revenues from them, I think is a straight shot. 10 times we'll have to see.
So how long? What's the timeline on that?
All right, here's where it gets interesting. And I would agree with his take there. Doubling or tripling, sure, 10x possible, I guess. I mean, but at that stage, this is just kind of like Elon saying it's going to be worth 20 trillion one day. Possible, I guess, but wait and see on a lot of that sort of stuff. But right here's where it gets interesting. What's the timeline there? Doubling revenues, by the way, does not mean doubling in stock price. Just in case you guys were wondering there, you need to come down to EPS and other numbers like that. That right there is what matters far more in regards to getting to continue to push that up there, not simply revenue generation overall. You can double your revenues and have stock price go nowhere, depending upon, what it costs you to double that revenue moving forward there. So kind of keep that in mind. It's not a direct correlation there. And you can't make a direct line to, oh, well, if they double their revenue, then therefore the stock price is going to double. That's just simply not how it works.
So the trajectory they're on, I think next 5 to 7 years, they could be 10 times bigger than they are now.
Okay.
But, I know. Nobody knows what's going to happen in 5 to 7 years. But you got to have a scenario. You got to have your goal, right? And they're there.
So, okay, 5 to 6 years, possible. That would essentially be just over a double up from here. In the realm of possibility, absolutely. Again, we poured a lot forward at that stage. So is that possible? Yeah, absolutely. Especially if they continue to grow revenues, obviously, I think keeping this clip going, moving forward, is going to be incredibly difficult. But nonetheless, that doesn't mean that growth rates can slow in regards to revenue, but then also on the back end, see that EPS number get better, which is kind of the better scenario you want to be in anyways, long-term for a company there. So possible. Yeah, that right there was reasonable, a lot more reasonable than a lot of the other things that I've heard in regards to Palantir, so that I'd put the price closer to $400 or so. If you're telling me that'll happen in, 5, 6, 7, 8 years, 10 years, okay, feasible there because of the type product that it is, because it is software, because of the margins that they're able to achieve right now. That is very, very much different than a very capital intensive business trying to grow. It is just incredibly hard to do that. So when you're talking software like that, it is possible, especially with something that is so new to the market and something that obviously is they're basically got a 20-year head start on everybody else coming forward. And it's something that everybody needs, and you can show a tangible ROI on that. Very, very much makes sense there that you could very well continue that trajectory into the future. Now, of course, they got to execute. Do I have any doubt that they'll execute? No. And of course, market conditions, like he said, 5, 6 years, who the heck freaking knows, right? Go back 2021. Who the heck had on their bingo card, I don't know, highest inflation in 20 years, right? Nobody, or I guess 40 years almost. Who had the fastest Fed rate raise ever? Nobody had that on their bingo card. Nobody had all kinds of different things that have happened, all the different geopolitical stuff and everything else. None of that sort of stuff was on anybody's card back in 2021. So he's absolutely correct right there. So I'll give him credit where credit's due that, hey, yeah, sitting around here trying to predict where Palantir is going to be in 5 years, 6 years, 8 years, 10 years from now is honestly useless to your investing. It's not something I do. It's not something I engage in. Obviously, we're talking about the video here, so I'm just kind of giving you my opinion on is it possible. So just kind of keep that in mind as you're kind of thinking about your investing and kind of projecting out where you think a stock is going to be. It's really, really hard to do it that far out.
Look at, how they're trading right now and some of their numbers. Their price to sales ratio is 124. I mean, it's wild. It can't sustain at that level. So let's say they move back to a more modest level. What is that level, I guess, is the question, short term and long term.
Sure.
And where does that value them?
Sure. Excellent question. So the price to sale ratio that market records a company, theoretically, if everybody was sane, and I would say I love all Palantir investors, but a lot of them are kind of insane, meaning it has become more of a cult. But that's okay. It's a good company.
On the bandwagon.
Bandwagon, everybody's jumping. So theoretically, price to sale ratio should depend on two things only: how profitable they are and how fast they're growing. Okay. And of course, in this market, it's also the sentiment, right? So
just let me translate that for you guys. In this market, it's speculative right now, meaning they don't care about any of the numbers or anything else. Numbers do not matter in markets like this, nor do metrics or anything else of that nature. It's simply where the momentum is, and it has been behind Palantir for some time now. And of course, they've continued to crush on earnings, which just continues that momentum.
They keep on growing and go to about 10 times revenue, as they're saying they will. The modest price to sales ratio will be about 30. And so once they're getting close, and if they still are going at that rate, then 50, 60 is not out of the question.
So there you go right there. Even if they're able to 10x revenue, which I think we all can agree is rather aggressive, you would still see the price of sales cut down, depending upon which number you want to use there, he said, down to a 30 or a 60. And obviously you can do the math backwards there to figure out where the stock price would be at that particular point in time. Those right there are kind of the hard realities that you've got to do whenever you're looking at investing and trying to project out things of that nature.
So if they grow 10 times and price to sales comes down from 124 now to 30, you're over $1 trillion. So that's how kind of I look at it.
Yeah, and it like...
Yep, so there you go. He kind of did the math there for you. That's how you get the $1 trillion market cap, assuming that you have a 10x in revenue in between now and the 5-6 year time frame that he gave you there. Again, pure speculation at that stage, but at least it's a reasonable number without some crazy, PE ratio or some crazy price to sales ratio like a lot of folks out there say, oh, everybody's going to continue to pay, infinitely at 130, price to sales forever. It's simply not true. That's just pumpers pumping. You got to learn to ignore that sort of stuff. Thankfully, he didn't do that here. I was kind of afraid he was going to give some crazy price to sales that would be reasonable. And it's just simply not reasonable at this stage, and it won't be reasonable in the future, more importantly.
You mentioned, a lot of the investors in Palantir are very pro Palantir, sometimes not acknowledging potentially some of the risks. What are some of the risks that an investor in Palantir should be appreciating?
The biggest risk, and I'm an entrepreneur. I've founded doing 500 companies along the way. Anytime a company has margins like Palantir has, everybody else says, why can't I do it? Right? I mean, if nothing else, I'll beat them on price, right? I'll be happy with 70% margin now instead of the 81%, right? So Palantir has a target on their back. If I'm no longer in the business of starting new companies, but if I was, right now, I would be raising funds to start a competitor to Palantir. And I suspect right now there are so many other companies that are trying to do that. So they're going to hit that competition somewhere. Now, could be that they always stay so far ahead of everybody else and nobody beats them. But I think, so there's a difference between Palantir and someone like Microsoft. Mm-hmm. Someone like Microsoft gets so embedded in enterprise, it's very, very hard to change. Even a company like Salesforce CRM is very hard to change once you're embedded. But what Palantir is doing is basically they're pulling all the data and giving you a decision-making, a dashboard or something. That, I think, is replaceable, right? You could switch over from them to somebody else. So they don't have a strong enough of a moat. So I think the biggest thing is more competition comes along. And the sentiment is at extreme positive, which I always say extreme positive sentiment is a contrary signal because everybody's like on one side of the boat, right? The boat is fine, unless there is storm, like more competition, and then what?
And then the boat capsizes.
But
So
that's a risk.
so knowing all
So not sure I agree completely there with the lack of moat. I think I think he's just viewing it from a different angle than I would. To me, the moat is the time it takes in order to build what they build in order to get the results that they get for their clients. Yes, somebody creating something very similar that they can come right in and plug and play. Absolutely. That right there, somebody will figure that out over the next few years and be able to compete. Will they be able to produce the results that Palantir has from all the lessons learned of already been doing it for 20 years? That right there is going to be the hard part. Now, is it going to take somebody else 20 years to catch up? Absolutely not. That's part of technology. That's part of everything, right? Once somebody else does it, it may take them 20 years to get it right, but the next iterations that come behind that from competitors don't take 20 years in order to get there. So I don't think there's any near-term risk whatsoever to Palantir in terms of competition and such. Will somebody eventually be a competitor? Yes. Does that mean Palantir will cease to be the dominant player one day? Absolutely not at all. Same thing with Microsoft being a dominant player. Same thing with a lot of other companies being the dominant players in their industry, despite competition rising up and everything else. Doesn't seem to matter over the long run whenever you have that premier product that, hey, let's say it takes 5 years for a competitor really to create a product that would really compete with Palantir on a high level. Okay, by that stage, how many other businesses, to include the government, are so embedded with Palantir they're not going with anybody else? And then, of course, also out there in commercial land, how many of those companies are going to be willing to switch just simply for a cheaper price because Palantir's done so well for them then and obviously has new products coming in the future? We don't know where 5 years holds or anything else of that nature. And again, this is all assuming that a competitor can get up and do it as well as Palantir in the meantime. To me, that right there is, sure, they might very well take away from market share, but the market is so large for this right now that there's plenty of room for multiple players to come up, be competitors, and everybody to win, and Palantir to still continue to win as well. I think that's the thing that everybody has to get out of their head. It is not zero-sum investing. That is one of the biggest fallacies that's out there. Wall Street espouses it, YouTubers espouse it, people on X espouse it. It is simply not true. There will be multiple winners in the IA race, hundreds of winners in the IA race. Just like back in, the tech bubble days, it was winner take all for the internet. One company or two companies or a couple of companies are going to win the internet. Well, guess what? Thousands of companies have won the internet. Hundreds of thousands of small businesses, and there's been trillions of dollars made every single year off the internet, off the backs of the internet and everything else of that nature. So clearly that narrative was 100% false, and it's the same exact thing with AI and what Palantir is doing. There's going to be multiple winners, and you got to get that sort of mentality out of your head that it's a winner-take-all race, and if somebody else is catching up to Palantir, therefore Palantir has to be dying, and all that other garbage like that is simply false.
of that, how do you invest and trade Palantir?
Okay. So the way we have done is we have a core position, which we started at $20.15. So we have very large gains. So we're kind of sticking with it. And then what we take on periodically when we see the dips or opportunities, what we call it a trader on position. Mm-hmm. So the core position will say, okay, unless something goes wrong, we're holding for next 5-7 years. The trader on positions, we may have it for a month or 2 or 3. We always have a stop on trader on position because we don't want to risk, and we have a target. So on trader on position, we're very happy to make 30, 40%, right? We're not trying to make several 100%. And we'll have a stop somewhere 10, 15% range. And so we don't put stops and targets based on, just we do it 7%, 10%. What we do is something unique. We look at money flows very, very closely. So we look at where the money was flowing in Palantir at which levels. And those levels act as support. But nobody knows that, right? Because everybody's looking at the chart and the lines, which are visible to everybody else. So the smarter players kind of play with it because everybody knows. But the way we do it, nobody knows, right? Because we have our proprietary money flows. We're looking at where the money was flowing. And the market has kind of a memory, right? So that's how we use our stops and so on. So start a trader on position, have a core position, trader on position, have some risk controls. So that's, I think, how people should do it.
Well, thank you for being with us in studio today, Nigam, to talk tech earnings. Always a pleasure to have a...
All right, we'll go ahead and stop the video right there. As you can see, he was essentially pitching his fund there at the end. And you see exactly how these Wall Street guys operate. Now, I'll give them credit for, they said they had a core position, and they're just holding it. And if you notice, he said, yeah, we're trading, but we're only looking to make 30, 40% as opposed to their core position. You know, we're not interested in making 700%. That makes no sense. That literally, when I hear that, I'm like, that's stupid. You know, as a long-term buy and hold investor, that's exactly what I want to do. But it shows you the Wall Street guys. One, I'd love to see how big his core position is versus their trading position. And two, they're trading so they can get paid. That's how they make their money, is getting paid. So they're kind of satisfying a lot of different investors there in regards to how they do it, right? They're saying, hey, we got a core position here, so that way you get to enjoy these gains in Palantir like we've gotten over the past year without, you know, watching the trade per se. But then we're also trading it too, so that way you can see, oh, look, we're taking our gains. Oh, look, we're being defensive here. We're being smart. We're doing this. We're doing that. You know, all that sort of crap that statistically underperforms, you know, dead people. But, you know, we're going to ignore all that sort of stuff because that's what people want to hear. I got it. And same exact thing, their proprietary, you know, data that they have. Again, that's just pitching your fund. There's no proprietary data out there. Every firm has proprietary data, how they collect it, how they collate it, how they use it, more importantly, which is really the proprietary, excuse me if I can say that word. Anyways, that is how they pitch investors. That's simply for the investor deck. That's nonsense and garbage. They'd be trillionaire investors if they had something that was truly game-changing, that just gave you all the right signals and all that sort of stuff. Simply not true. So that's Wall Street's game right there. Now, in regards to Palantir and can they make $1 trillion? Yeah, I said it earlier. I think they absolutely can. Now, if you're asking me the time frame for it, not nearly as quick as all the bulls are going to say, and vice versa. I also don't think it's never going to get there either. Now, is there execution risk? Is there a lot of other risks that come along with this? Yeah, absolutely. Especially given where it's trading at and everything else, because I do believe that's much further down the line than most folks believe that that is. Now, am I wrong? Am I going to be upset? No, of course not. I own a ton. I would be ecstatic if it happened quicker than that. But I know a lot of folks are basing investing decisions today based upon hype, based upon, oh, $1 trillion is right around the corner, whatever the case is. And that is how you get destroyed as an investor, especially in a hot market like this, where it seems like people make predictions, right? Everybody's in the prediction business during a bull market, and they all seem to turn out right. Their predictions are never based on earnings. They're never based on, now they may mention earnings, they may mention financials and fundamentals, but the reality is they're not based on anything. You saw the same exact thing in 2021 when stock market ran up and, hey, yeah, Tesla at 1,000 PE. Don't worry about that. Don't worry. Robotaxi's coming. Hey, FSD is going to get solved next year. All these sort of things. Now, none of that's tangible, right? Matter of fact, none of it still happened. None of it's printing anything to the bottom line still 4 years later. But that's what happens in that bull market. People start rationalizing that. And yes, some of our favorites were out there saying, oh, hey, I know it's at 400 right now, but 500 is right around the corner because FSD, because Robotaxi, you know, because batteries, whatever the case was back then, whatever the bullish narrative was. There was nothing tangible there. It was just based upon hype and hopium. And we're starting to see that a little bit with Palantir as well. Not saying they haven't had incredible earnings performance, because they have. Just like Tesla had incredible earnings performance in 2021. They were crushing it in regards to earnings. But your stock price can actually outrun incredible fundamentals and incredible earnings. That's what we had with Tesla back then. That's exactly what we have with Palantir right now. But if they continue this performance long term, regardless of whether it trades flat or down, whenever that happens, whenever the market finally gets out of hype mode per se, which will happen, right? There's no such thing as an infinite bull market. Just keep that in mind, guys. When that happens, if they continue their earnings performance, unlike Tesla, who fell off on earnings performance, they continue that earnings performance, hey, you're going to get an opportunity to get some cheap shares again. And of course, that sets you up for that next leg up to, potentially hitting that $1 trillion mark in the future. But again, like I said, that is pure speculation, even on my part. That is pure speculation. I don't include that. It's not a part of my investing thesis whatsoever. It's just simply a possibility that's out there. And Palantir is the type company that could potentially do that in the future. That's all that I'm saying with that. And if you want to learn how to fundamentally invest and identify stocks like Palantir, under $10 and effectively set price targets. And oh, by the way, Palantir, buy it all the way up and through last year. So it wasn't like I bought it back then under $10 and I didn't buy it anymore. No, we were able to buy it last year as well at incredible prices, right around $20 or so. I think some of our members may have gotten in the teens or so. Make sure you take advantage of the earnings flash sale that's going on right now. Check it out. It's the pinned comment down there where you get that. Plus you get free courses, free coaching. Be a part of the best 6, 7, and 8-figure Discord out there. You get 3, 4, 5 videos a week from me that just only go to the group there. You get to jump on live Q&As, talk to me anytime in my DMs or post right there in the group. We got a room for virtually every single stock out there. We got a real estate course. There's so much involved in the membership. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.